Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
It's good to be with you, Jim.
OPEC Plus cutting production by 1 million barrels a day. What kind of an impact is that having?
Well, we got a nice bounce in the price of crude oil from, $73, $73 to $83. So that was, a big bounce over the last couple of weeks. And as you know, when we chatted last month, I mentioned to you that on March 13th we got our first buy signal. March 15th we got a second buy signal. So we went from being cautious, which I've been for, almost the last year that you and I have been talking, and I became bullish with March 13th. We had only 8 ideas on the buy list of the 37 companies that we cover. We added 7 more on March 13th, 7 more on March 15th. So we now have 22 names on our recommended list. And my guess is that we are going to have a pullback here because it's had such a strong response. And the reason for the decline are twofold. One, I think earnings, either the announced earnings or the guidance, may be disappointing. Tomorrow we start seeing the bank earnings, and they should be hurting because, investment income has not been, underwritings and deal flow has not been very strong. And so I think we're going to see some noise there that's going to bring markets back down from the 34,000 level on the Dow, potentially below 30,000. And if there is another bank problem, and of course there still are, you look at the First Republic stock price, it really hasn't bounced much from the low. You look at Deutsche Bank in Europe, Commerce Bank, these banks are still, in the eye of the hurricane. And so I think there's possibilities. Even Warren Buffett talks about, when he was on CNBC today, or he was talking about he still expected some banks to fail. So if we have that and any of that disturbs the market like it did in mid-March, that could take the market below 30,000. When you have a high beta area like energy stocks will retreat, and I think that will give us our next window to buy stocks. It may not be as good as March 13th or 15th, but it'll be attractive, and I think we'll add 4, 5, 6 more names to our buy list. So we're in the buy camp, and we're bullish, and we think the next 3 to 5 years are going to be fabulous. The question is, when do you add more to your positions? We added a lot during March 13th and 15th, and now we've had a great bounce. Now let's wait for a pullback, and on this pullback, buy more.
Mm-hmm. Now, in an interview I did with Mike Swanson, he says there's now pushback against electric vehicles. 70% of Americans say they want to stick with their ICE engines. Well,
there's 2 issues there. Is one, there's been some reports on the news in the last few days from the consumer advocacy groups where they say that the weight of these cars, because of the batteries, is so much higher than a conventional vehicle that if there's an accident, it could be dangerous to the people in the car, but also dangerous to those who they hit. So the damage to other vehicles or to people on the street or pedestrians or whatever could be more. The other thing, of course, is the cost of them is still pretty high. The range is still an issue. If you're somebody who wants to go between Edmonton, Calgary, and back, you can't do that. So finding a charging station becomes an issue. So there's lots of issues still ahead. You mentioned earlier about the OPEC announcement of 1.2 million. They really, they did that to squeeze the shorts. There was over 100 million barrels that commodity futures traders had shorted. So by announcing that cut and people believing it, the shorts had to cover because the price of crude oil rallied up $10. My view is that OPEC said last year they were going to cut 2 million barrels of production. They only really cut 600,000 barrels. And so it really wasn't the impact that it should have been. The 1.2 million, as that's allocated to the different OPEC members, a lot of them are just not going to abide by it because, Saudi Arabia could probably do some cuts because they have lots of revenue coming in. But if you're Angola or Nigeria or any of the other countries with high populations, Iraq, Iran, why would you even contemplate lowering your production? You need every dollar coming in the door to feed your people, to cover the costs of government, the graft in many of these places. They don't want to lose that. So my guess is that, that 1.2 million may only be 200 to 300,000 of real barrels. And, with the slowdown in the world economy that we're seeing, U.S. numbers are down, in terms of demand. That came out in the EIA report yesterday, 6% down but from a year ago. So to me, I think that the slowdown in the economy is legit. Europe has got less demand. Japan's got less demand. U.S. has got less demand for consumption of energy, of oils particularly. And that, I think, is going to bring the prices back down below 75, so from 83 to 75. I don't think we're going back to that $64 low. That's the low for 2023. But a pullback here makes a lot of sense to me. And the economic data in the next few weeks will be watched very carefully. The CPI and PPI help because of lower energy prices, the March data. But if you look where prices are now, that means the data points in the next month are going to go up. Because we've gone from, as you know, $64 to $83.
Now, of course, we saw carbon taxes go up April 1st, 10 cents a liter, 40 cents a gallon. What does that do to consumption? And do Canadians really have a choice? Do most people drive because they have to, not because they want to?
Well, it's going to remove discretionary travel. For the travel, you need to go to work or shop or take your kids to lessons. That's going to continue. But the discretionary travel that you might have, I think, is not going to happen as much. And then holiday travel, when it comes to the summer driving season, may be impacted. People may just say, okay, I'm not going to go, a long-distance holiday. I'm going to do a short-distance holiday. Because the cost of going from place to place is going to be a big chunk of the money that they may have allocated to the holiday spend.
Yes, last year we saw parents involved in a hockey tournament cancel their plans because they couldn't afford to drive their kids to it.
Yeah, and I think we're going to see more of that. And the airline costs are also going up. I was just last week in Toronto, and I was very surprised at how expensive it was to go Calgary, Toronto, back to Calgary. The car rental was reasonable. Gas, of course, was $1.60 a liter in the Toronto area, so that wasn't much fun. But the air portion was surprisingly 30-40% higher than I thought it would be.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, how healthy is the Alberta Oilpatch?
Well, there's two parts to it. When you see $83 and then you multiply it by the Canadian dollar, U.S. dollar exchange rate, it's very, very good for the industry. The problem is the $2 handle on natural gas, and if you're producing liquids-rich condensate wells, you're making all your money really there, and whatever price you get for the natural gas just recovers some of the costs. But you don't really care because the revenue side is coming from the liquid side. So the natural gas we have right now in both Canada and the United States are low prices, $2.05 for NYMEX in the States, $2.40, $2.50 in Canada for AECO. And I think we're going to see days, maybe we even see lower prices than that, once the maintenance season starts on the Nova transportation or the Trans-Canada transportation system, because they usually go in and do any modifications to the compressor stations or to the pipeline system expansions that they do. That means some parts have to be shut down as you bring on new lines. So I think that could cause some lower prices. But I think the key is going to be winter 2023-24. And if we have a cold winter, that's going to help. And then, of course, at the end of 2024, LNG Canada comes on. And when that comes on and gas has to go through the Coastal Gas Pipeline system, and that's 2.1 BCF on top of the 15 or so that's produced right now, that's going to be a nice boost that would improve the pricing in the second half of 2024. I'm thinking that we're looking at $5 gas during winter of 23-24, and I think we'll see higher prices than that once the Coastal Gas Line and LNG Canada are on their way. And I'm also thinking we're going to see more announcements. LNG Canada will say they're going to do the second train. We may see Cedars get their go-ahead, Woodfibre get their go-ahead. There's a number of projects that are heading towards final investment decision after they get the environmental permits from the province of BC and from the federal government.
Friend of the show, Stuart Muir, points out, even though the pipelines are expensive, one of those LNG super tankers carries $110 million worth of product. You can make your investment back pretty quick that way, can't you?
Well, if you're a producer and you're an LNG operator, yes, but Coastal Gas Pipeline system, the first phase, doesn't make enough sense for the owners because the cost overruns. But if LNG Canada 2 goes on and any of the other pipeline or the other LNG plants come on and they use the Coastal Gas Pipeline, then the tariffs from all of them, let's say 3, 4, 5 BCF, going through the Coastal Gas Line as they add compression and expand it, that's when the total returns will make the coastal project viable. The one that's a mess is TMX, the oil pipeline. That's $20 billion over cost estimates. The government of Canada, if they want to sell it to the First Nations and to private company operators, is going to have to take a significant hit because the tariffs that would be needed to be charged at the price that they pay to build it just won't make any economic sense, and the producers won't find it an attractive alternative to rail, and they won't use it.
Was there shock in the energy community when former BC Premier John Horgan, who fought the Trans Mountain Pipeline tooth and nail, decided to go on the board of directors of a coal company?
Yeah, and he was against all the coal industry, too. So it's very hypocritical. There's politics and there's economics. So politics is what he was doing before. Now it's personal, economics. And hey, why not become a director of a company and get paid a very fat income? I'm getting my income from being a politician, and I'm getting my income from this. Hey, nice pass. I make more money than when I was working for a living.
Well, I was going to say, in Canada, traditionally, I don't think our politicians take bribes, but they certainly do like those very well-paying corporate posts after they retire from politics. Oh, yeah,
they end up being, like the rainmaker at a law firm, which we saw a number of our politicians do. Trudeau did that. Mulroney, I think, did that. They go and they work in that area as a door opener. It's a very effective way to make a lot of money. The banks have hired people, that are at senior levels, and bring them in as vice chairs, and again, they're rainmakers. That's their job. The politicians get a nice pass from their pensions from the government at a young age, and they can still make quite the nice living, leaving and heading to greener pastures as an advisor in at board levels or on the boards or vice chairs or at law firms.
Can Canadians be assured that we'll have adequate energy supplies, even though we have a federal government that really doesn't like anything that comes out of the ground?
Well, in Western Canada, I think we still believe that the provinces have the control of resources, even though one of the Liberal ministers is talking about taking that power away, which I don't think can happen. I don't think Quebec's going to be willing to give their resource stuff to Ottawa, so Quebec is in the same camp as Alberta and Saskatchewan on that one. Other provinces, have mining in them, so they're not going to want to pass that on. Newfoundland, New Brunswick, et cetera. So I think that the northern provinces, northern territories as well. So and BC, of course, has a big mining industry, and to transfer that power to Ottawa is not something in their best interest. So I think that was a trial balloon by the Liberals, and I don't think it has any traction and goes anywhere. The big thing is going to be that, the natural gas, the government of Canada is on side on that. They want to do, hydrogen. So there's going to have to be some support on that, especially in the eastern part of Canada. And carbon capture is part of their mandate. So a lot of new money is going to have to be spent on R&D to see what they can do to make that more efficient and more economic. So I think that we're not finished with that, and I think the transition is going to be positive. Where do we create the hydrogen? What parts of Canada? And what are the inputs to create the hydrogen, green hydrogen, blue hydrogen? So I think that I wouldn't say that the last Albertan should turn off the lights and leave the province. I don't think we're going to see that at all. I think the best days for the energy, the fossil fuel industry, carbon capture, hydrogen, and all the things that we need day to day that have inputs from petroleum products, I think our best days are still ahead of us.
Any concerns in the energy industry about Alberta Premier Danielle Smith?
Of course. Right now it's a toss-up of who's going to win the election in May. There's a lot of advertising. The writ comes down, and then of course all the posters start showing up on the streets, and the players start knocking on your door, or their volunteers knock on the door. So I think that it's going to be a very, very tight race, and given there's really only two parties because you don't have Liberals here, so it's really the NDP and the Conservatives. It may be 5-10 seats either way, whoever wins. Edmonton is the majority of the seats there go to the NDP. Rural Alberta usually goes UCP. The battleground is Calgary. And a lot of people in Calgary were hurt by what happened with COVID. And the businesses that were lost and closed, jobs lost. So there's sympathy for the NDP view there, and also the issue of the pensions. The Conservatives, UCP, have been talking about setting up under the AIMCO management of the national retirement for people taking over CPP and OAS and doing it locally managed. A lot of people are being impacted with the advertising that the NDP are putting out, saying, don't take away my CPP and OAS. So it's going to be a nasty, tight election.
Almost like what we have here in BC every time. Politics here is a full contact.
3 or 4 parties there,
right? But again, now it's going to be United BC. Or the BC United Party, which used to be the Liberal Party, which used to be the Socred Party.
Yeah. That's dating yourself there, Jim. Socreds.
Been around a while.
Yeah.
Joseph, anything else we should be keeping a close eye on right now?
No, I just think that, the psychology where I was negative last year, The dynamics have changed. The price of stocks are down 50-60% from the highs of 2022. There's bargains in both the energy service, pipeline, and infrastructure. And what I would say people to do is wait for this correction that I think is going to happen between now and the end of May to add to your positions. But the key thing is your mental state should be buy on weakness and buy for the next 3 to 5 years, not that this is a sell situation because of this correction.
Josef, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Josef or for any of our guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.